Good morning, everybody. Starting a little bit early today because I wanted to do, a recap of the trades that I made yesterday and give y'all a brief analysis before we start the trading day. So let me open up my neat little spreadsheet available over on the premium Discord, which is linked in the pinned comment that I haven't pinned yet. Actually, yeah, I did pin it. So, linked in the pinned comment. Heading over to my drive. Just made this brand new. Good news is bad news, yard dog? Yeah, that is true. Although algorithms are very tricky, where whenever the algorithms see that unemployment rate came in lower than what was expected, they just buy the stock. So that's what you got on the initial reaction to the unemployment rate coming in at 3.7. My assumption was that it would actually come in, 3.5 versus 3.7 expected. My assumption was that it would actually come in higher because if we look at the previous continuing jobless claims over on the economic calendar, I think this came out yesterday, Thursday. If we look at the continuing jobless claims, this is higher in December than it was in November. So it was very shocking to me that unemployment came in at 3.5 again. This is the lowest that we've seen it historically, other than a couple of months ago. It was at the same level at 3.5. But if you look at the last 4 weeks of the continuing jobless claims, this is the number of people that are unemployed. This is higher than it was the 4 weeks previous. If you look at the 29th, we'll go back 4 weeks. And then that's obviously higher than it was in November. So it's very surprising that unemployment came in at 3.5. And it does feed into the narrative that the job market is super hot, which leads to higher wage inflation, which inevitably leads to goods inflation, because whenever the money supply can't keep up with the goods supply, then the price of goods goes up because there's more money to spend on the same amount of goods. How can we get the new spreadsheet? It is available through the link that I have pinned. It is through the premium Discord, and I'll show you exactly what's going on here. So far for the month of January, I have made $548 for the first week of January. I look at the profit. This is not the right measure. This is supposed to say PL by month as a percentage. I have it written as percent PL, percent average PL by month, but it should be just based on how much money I made versus how big is the options account. My options account is $7,000. I've made 548 so far this week, so this should be 8%. If we look at my number of trades this week, I made 11 trades, completed 11 trades, that is. Whenever it's complete, then it gets logged here. And then my win rate so far this month, or so far in January, is 62.5%. This is supposed to be a line graph where it'll show me. So if I edit this to include my balance next month, let's say it's $8,500, maybe I make $1,000 and get lucky this month, it'll start to populate that. But all these special formulas that you can see, took me a while to fix this up yesterday. It took me like 2 hours. Even with super focused work, no distractions, still took a very long time. Anyway, so the trades that I opened yesterday was a call debit spread expiring today. That one is going to be doing pretty well because I'm assuming that SPY will be above $381. Currently it's trading at $383. I also opened a Iron Condor, assuming that SPY would be between $376 and $384. Currently, again, SPY is trading at $383, so that does put our Iron Condor at a little bit of risk. But I do see this report as good news and bad news, like Yard Dog said. Good news is bad news in this market. This means that the labor market is very hot, which has been a bad narrative for the rest of the data that has shown a hot jobs market has sent the stock market down. So I think we'll probably trade flat with this news. It's good, but it's also bad. So my assumption is we're trading neutral today. The problem with trading neutral, though, and holding the Iron Condor for right now is that Fridays are super volatile since there's a lot more options that are expiring on a Friday. So you have to be careful because the market makers, the people that are buying and selling the options, the people that are selling the options to the people that want to buy them have to hedge their positions by buying and selling hundreds of shares of the stock. And that will push and pull the market in different directions. So it makes it a little bit more dangerous to trade on Fridays. Link is for the old spreadsheet. Let me send it over. Make copy. I'll link it in the premium chat. Share. Publish to web. This is different. No, I don't want to publish it to the web. Share with others. There we go. Click the wrong one. All right. Yeah, so I'll just link that in the regular premium Discord. If you're already part of it, then you should have access, and then I'll fix the resources tab, the start tab later on today after the live session. Close the Iron Condor. You're a coward. I think the Iron Condor is the one that's going to work. That's my best guess for right now. Obviously, I could be wrong. But I think the Iron Condor is what's going to work today. So far, we're pulling back off the open. So that kind of confirms my bias. We got rejected at 383.74, which is an opening or a closing price from a while ago. I want to start making my price levels color coded to where if it's an hourly chart, then it'll be a specific color. If it's the 5-minute chart that I usually use, then it'll be a separate color. So I'm going to try to do that probably this weekend. Set up a system in place. All right. I'm going to get out of the called debit spread for right now. It's trading for 65. I think that's a reasonable price. I'd like to get out at 70, considering that it's $1.50 above the strike price that I chose, but Robinhood's definitely not going to give me that. So I'm going to close all 7 of them at 65 each. Oh, it looks like the bid just moved to 66, so maybe we can negotiate a little bit higher. Yeah. Wow, I'm surprised, but I will take that $100 profit and be happy with it. Okay, so let me post this in the, and of course it goes past that 382.90 mark as soon as I close, but that's okay. Still think that we're gonna trade flat. It's a good report, it's a bad report at the same time, so I think it's neutral, but the problem with neutral, again, is the market makers will swing the markets in both directions, making it a lot harder to trade Iron Condors. God dang it. Come on now. All right. Closing options alert. Premium 101. Just took profits on the 380, 381 SPY call debit spread. This one expires today, 1/6 at 66 each. buy, call, debit, and I bought those originally, I think, at like 50 each, if I remember right. Yeah. Yeah, I opened 2 at 49 and then 5 at 50. So, say, opened 2 at 49, 5 at 50, so 50 times 5 plus 2 times 49, $348 that I spent on it. And I got how much money to exit? 462. So a $114 profit. Baby on the cash type. All right. And now they're going for almost 80 cents a piece. Oh, regret. That's okay. These are going for 50 now. So that's actually good that these are going for 50 because I originally got them for 57 yesterday. So I'm glad that I opened these yesterday instead of this morning. That way I got that extra credit from having a longer expiration date, 1 day to expiration date. Not that much longer, but helps me out, get a little bit of extra credit for it. Currently, we're trading again at the 383.74 mark. This might be a double top right here. That's what it's looking like so far. The RSI is still above 50, so that's that's bullish. It's between 50 and 70. But with that double top in, that could be a possible trend reversal. Hopefully, the ideal scenario for this iron condor is SPY comes between the middle between the strike prices, which is 376, 384. So ideally, we want SPY at $380 and as close to 4 p.m. as possible for this trade. I don't think there's any more news that's coming out today, but let me check the economic calendar just to make sure, double check it. Jobless claims, PMI, these are all yesterday's reports, not relevant for today. We got PMI coming out in about 20 minutes. That could shake out the markets in one direction or the other, so maybe we try to exit. I think the last few reports have been negative on the PMI. This one's expected to come in very hot at 55 versus 56.5 last month. That's hard to say that it'll still be that hot. Usually when it's above, or actually when it's above 50, that's a sign of the economy doing well, but we're seeing more and more negativity throughout the economy, especially among purchasing managers, this is the Purchasing Managers Index, so it's a survey of purchasing managers in the non-manufacturing industries. We also have non-manufacturing business activity. I think both of these are going to be worse, and that could amplify the recession fears, so maybe we hold the iron condor after the report, see how that ends up shaking us out. And that's in about 22 minutes. Right now we're trading at 382, and the iron condors are currently going for 41. That means we've already made $180 in profit for this trade, which I like. But maybe we take profits on half, reduce our risk, ride the other ones after the ISM PMI report, and that could make some decent money. We have 3 Fed members speaking, 2 at 11:15, and then 12:15 we have Fed Cook, which is the governor, Bostic, and then Barkin. So if we check the Fed cheat sheet, we can see where they stand in terms of being a dove or a hawk. So Bostic is a non-voting member, so if they're not bolded, they're not voting this year. From Atlanta, and they are slightly hawkish. Barkin is another hawkish member, more hawkish than Bostic, and they're from Richmond. I'm assuming that's Virginia, but not 100% sure if there's any other Richmonds in this country. But Barkin is speaking. That's at what time? 12:15, and then Fed Cook. I think they are a neutral. Fed Cook, yeah. So they are on the board, and they are a neutral member. So you can see this nice little thing showing you where they stand. And usually the more hawkish they are, if they give any dovish statements, that has a good impact. And then the opposite, if they're a more dovish member, like Brainerd comes out with some hawkish statements, and that's bad for the market. Looks like these iron condors are continuing to lose their value. Jesus Christ. Down to 36 each, made $200. Feels right to take profit right now. Yeah, we bounced off of that 381.39 mark, so I'll take half profits. Close 5 of them at 40 is what it's looking like. Oh, maybe we can get it for 39 if we're lucky, but it's hard to get lucky with Robinhood, especially with iron condors, so it makes it even worse. All right, so I closed half of that position at 39 each, holding the rest until that report at 10 a.m. All right. Nice little profit there. God dang it, I keep taking the wrong screenshot. Ugh, annoying. Just took profits on 5 of 10, SPY 375, 376 to 384, 385 iron condors expiring today 1/6 at 39 each, and now they're going for 34. So I got ripped off, and y'all get the better price. Lucky y'all, huh? If we hit 380 by the time that the report comes out, I'm just gonna exit the rest of these and call it a day there. That way I don't have to worry about the potential downside after the 10 a.m. report. Maybe we could take a downside trade before the report if that's our assumption. I wouldn't put a lot of money on it, but it seems like each PMI report has sent the market down this week. So if that's continues to be the case. The problem is, though, the PMI reports that are coming from non-manufacturing have been very good. It's above 50, so that's a good sign. But if you look at other reports, other PMI reports have been well below 50. So it's kind of hard to say how the market would interpret it. All right, we're down to 380.25. That's close enough for me to take profits on this. 0.35, hopefully. Fingers crossed on Robinhood. Fill in this order. All right. Nope, no fill for me. Please fill my order. Markets keep dropping. Yeah. You got that PMI report coming out in about 15 minutes. I think that's going to amplify the sell-off potentially if it comes in worse. All right, please let me close this at 36. For the love of God. There we go. All right, so nice little profit I made on that. All right, and I'll just reply to this. Closed the rest at 36 premium. 101 premium. All right, so 39 plus 5, well, 39 times 5, I should say. 39 times 5 plus 36 times 5. $375 is what I paid to close out of all of these, and I originally got Iron Condor. Let's come on now. Iron Condor. $39. I originally got 57 each, so $570 of credit. Originally got 570 total credits. So profits of 570 minus 375, $195. 195 profit. Nice. I'll take that any day, baby. Gonna love to see it. Now we lost our downside for SPY on the 10 a.m. report that's coming out. So I'm gonna wait on it. It's hard to say that it'll go below 378. It is possible, but I would have been more comfortable saying that it would be below the 379.65 mark. So going another 150 down makes it a little bit less likely, but there's still some opportunity here that we might be able to take advantage of. We could also do a call credit spread if we're more neutral and we don't think it's going to go down that much. So that's another possibility. With a call credit spread, you are going to get less risk reward, or worse risk reward, I should say. So that is the caveat, because the stock can either trade flat or go down, and with a put debit spread, you're assuming that it's going to go down. So you have two directions a trade can go versus one direction, and since there's less likelihood of it going one direction than two directions, you take on more risk with the trade. But I say we stay below probably the high this morning, 384. That call credit spread is paying 15. Not really worth my risk. 383, we get 22. It's okay. I'd rather take the downside trade, I think, and assume that we're going to go, I don't want to say 380, 378. I feel like that's a stretch, but it's possible. If I do a 378 put debit spread, that cost me 38 cents right now. It's not a bad opportunity. If it goes down to the morning low, the pre-market low, then they should be going for about 50-ish. So there's a decent amount of upside there. I just wouldn't want to put a lot of money on it. I would probably only put like $200 max on this trade. I don't want to spend a ton just because of my luck has been very good this morning, so kind of need to reel back. Luck is a pendulum. It swings back and forth, and I've been getting pretty much all of these events right, per se. So got to scale back the positions accordingly. But just open that put debit spread, assuming that we're going to go to 378 or below. Currently trading at 380.14. And this is after the 10 a.m. report, so we've got about 10 minutes until it drops. just opened a new SPY put debit spread. This one expires today, 1/6, so this is a day trade, obviously. 378, and my price was looks like 39 each. Oops, I can't type that one. PMI coming out in 10 minutes. This week's PMI reports have all dropped the market. Don't expect this one to be any different, especially considering expectations are well above 50. We should see a decent slowdown in non-manufacturing PMI. The problem is with non-manufacturing versus manufacturing PMI, though, is that we're still seeing decent inflation in everyday goods and services, whereas the prices of high-end goods like vehicles, housing, rent are starting to see a little bit of deflation, and it's going to take a lot longer. This is something that I actually tweeted about, I think yesterday or the day before, tweeting at, I guess not at, Fed Bullard, since he doesn't have a... Let me actually copy this so y'all can follow my Twitter and keep up with my more up-to-date analysis. My guess is CPI comes in good. That's not the right report. This one was a pretty good one. Fed Bullard says real wages have fallen short of inflation increases, as if this is news. And then I had this template. Wage gains are lower than inflation. Always have been. People will always make less money each year than inflation goes up. Fed Bullard says inflation likely to ease slower than the markets expect. We're seeing deflation in homes and cars, but services and everyday goods will be sticky thanks to the massive wealth that was created over the last decade of free money and the last 2 years of insane stimulus. Good morning, MC. Glad to see you here. You're a little bit late, but worth the wait. Green this week, yeah. It's been a very good week for me, actually. Seems like all my trades have been on point. I've been focusing more on economic data, and that's been one of the goals that I've set for myself, to focus more on economic data and to focus on swing trades. That's basically my edge in the market, is predicting events. Not really sure how I got so good. Like, it's a binary event. It's either going to be good or bad, but I've kind of honed my craft and trying to find the sentiment, I guess, before the report and how the markets are going to react after. And that's been a strategy that's worked out really well for me. We have a crap ton of concurrent viewers. We have 85 viewers right now. God damn. Thank y'all for joining me today. But yeah, let me log the couple of trades that I just put out, or just closed out of. Closed them both today. And I closed them myself. They did not expire. The SPY called debit spread, I believe I closed that at 65. I'll have to double check. Or 66, actually, if I remember correctly. I'll have to double check with the Discord. And then the other ones, the iron condors, let's see. What does it mean when it says not enough overnight buying power? You probably have a cash account, and with a cash account, it takes the trading day that you close the option plus 2 days in order for that cash to become available to you again. After you close out of a trade, you have to wait for that buying power to hit your account. So you have to wait for the money to settle in order to make your next trade with that same buying power that you used to close the last trade. And that's the benefits of having a margin account. That's a video I'm going to be working on in the near future, margin versus cash account, and the pros and the cons of each of them. It should be a pretty informative video. But the pros of a cash account is that you can make unlimited day trades. The pros of a margin account is you can trade spread options, and you don't have to deal with the T+2 or the trading close plus 2 days for the trade, for the money to settle back into your account. So you can basically trade as soon as you close the last trade. But with the cash account, you have to wait the trade close plus 2 days in order to use that same buying power. You've had it for a month. Well, it must be because of other positions in your account that you've closed out of and don't have enough buying power. So something that I've kind of preached about recently since the start of quantitative tightening is having a lot of buying power and a lot of cash. That is the best thing that you can have right now. So I would definitely get your buying power up if you can. Add to your income and then funnel that money into your trading account, and that'll help you do better in trading. But let's see. Yeah, 66 that I closed these at and 39 that I closed the iron condors at. So let me type in 39 here, and that means that so far this week, excluding the put debit spread that I just opened, I have made $840 for a return of about 12% for the first week of January. So very good start to the month. Hopefully it continues. Currently SPY is going up to 381.20, so the put debit spread that I opened probably not doing well now. But the report comes out in about 4 minutes, so we'll see how that shifts the market in one direction or the other. Baby stash buff. Yeah, it's the stash. The stash is where the profits come from. Good morning, Al-Qaeda. Hopefully I'm pronouncing that right. What's the best way to avoid restrictions if you have less than 25,000? Having a hard time trading. Having a lot of buying power is the best thing that you can do. If you're talking about the PDT rule, then to avoid it, you can switch to a cash account. If you have a cash account, then you can take on as many day trades as you would like. So that's the pros of the cash account. But then you have to wait for the buying power to hit your account after you close a trade. You have to wait the trade close plus 2 days. So that's the drawback there, the con. With a cash account, and then with a margin account, you can trade spreads, but with a cash account, you can't trade spreads. You just have to do level 2 options trading. So buying calls, buying puts. So that's another drawback of a cash account. But some people don't like trading spread options. Some people don't have level 3 options trading clearance in the first place. So it depends on what you want, really. If you want to trade spreads, then you're definitely going to have a margin account. If you want to day trade just regular calls and puts, then cash account is sufficient for you. Put debit spread on SPY isn't doing well either. Trade spreads on a cash account, really? I didn't know. I think that you need a margin account unless you have like a crap ton of cash to cover possible assignment. Maybe George is just super rich out here. With options, it's a day of the trade. +1 stocks are day +2. Okay. Yeah. I always remember T +2. I guess from my initial trading days back in like 2016 to 2018. I was only trading stocks. I wasn't trading options until 2020. So I'll have to update myself before I make that video on margin versus cash accounts. If you sell an option with a cash account, that money will be settled until the next day, yeah. I wonder why stocks take longer to settle the cash. Interesting. Got rejected after applying for level 3 options. Can reapply in January 2024. Jesus Christ. Why? Why do you have to wait a year to reapply? That's ridiculous. Got rejected after applying for options level 3. Yeah, if you got rejected by Robinhood, you can always switch to other brokers. Aries is very lenient with their approval system. There's other brokers that are less lenient, especially Fidelity wouldn't even let me trade spread options when I've been trading options for 2-3 years now. So I have the experience. I've traded spread options before, and I explained that to them, but for some reason, Fidelity wouldn't let me. Can I unlock the account P&L? You can always see it here. Last week has been negative. I think that's from, let's see, probably some stocks dropping. So I have a UVixy call option that's been losing a lot of money right now, down 75%, but the VIX cycle still, I believe, is going to happen. So if we look at VIX, currently it's trading at 21.6, so it's actually dropping. So maybe the cycle has been short-lived to where we peaked in 12-13, but the trend has been 2 to 4 months for the VIX. Still think that there's more room for it to run if we get more recession fears. But maybe the recession fears are starting to be quelled by the good jobs data that came out this week, possibly. But yeah, that UVixy trade's not doing too hot. I am going to keep dollar cost averaging it into it just because I still believe that we are going to see the pop later on. But maybe we have a new range for the VIX instead of 20 to 35. Maybe we just have 20 to 26. That would be very interesting. I guess we've already had so much volatility in the past, so PMI report has come out. Yes, it has. Let's go over to the economic calendar. Whoops. All right. Looks like we're reacting positively to the PMI report so far. On the release, it came in at 49.6 versus 55 expected. That is very off on the expectations. I'm surprised that we reacted positively to that. Last month was 56.5, and if we look at new orders, it's down to 45.2 versus 56. That should amplify recession fear, so I'm not sure why we're heading up on the news. If there's any other data that came out, let me check. Factory orders, durables. Business activity is worse. All this data is pointing to more recession fears, but somehow we still made our way up on it. That is quite shocking. Factory orders down 1.8% versus 0.8% estimated and positive 0.4 the month before. I think it's just volatility, but it seems like a pretty definitive bounce. I would just think that would amplify the recession fears and we would head down, but for some reason that's just not the case today. That's weird. Yeah. Fidelity is definitely one of the most strict whenever it comes to options levels approvals. All right, let's see. That UVixy trade is not going my way. But I do want to buy some UVixie shares now that UVixie is down. So I'm going to buy... I've been dollar cost averaging once a day into $100 worth of UVixie, so that's what I'm going to do right now that it's down 4%. And this report was bad, and it should amplify the recession fears, but not the case for some reason. So let me buy some shares. Got 15 point something shares, 15.7. And now I have a total of how many? 442 shares of the UVixie. Buy options. Just bought 100 worth of UVixie. Alright. Good morning, Cameron. Bad news is good news because the Fed may stop increasing rates so fast. They still have to raise rates. It doesn't matter. Inflation is still coming in hot, so it doesn't really make sense for them to slow down the interest rate hikes. Or they said they're not going to lower rates until 2024, and the bond markets are still way ahead of that. If you look at the FOMC countdown, they're predicting a pivot in June, and that's not going to happen until inflation is at least down to probably 3%, and we're still at 5.4. And if you look at core PCE, it's not moving in the slightest. But yeah, if you look at June, they're expecting rates to peak at 5%, and then by December, they're expecting rates to go back down to 4.5 to 4.75%. So the bond markets are lying to themselves and probably going to get clapped. The markets are not going to like when the Fed goes against the futures. But I want to look at core PCE to point this out. Economic calendar. Actually, I have it on my Twitter, so we can do that instead. That'll be a lot easier than figuring out where to go here. So if we look at CPI, it is headed down faster. So I made this tweet saying that my guess is if CPI comes out good next week, the Fed might use that for the main inflation measure instead of core PCE, because core PCE has been moving down a lot slower. So they might switch to CPI in order to save face with the markets, basically. But if you look at core PCE, which is the Fed's favorite measure for right now, it's been the same basically since May through June, or May through July, so about June of last year. So July, August, September, October, November, December, January. It's been 7 months that inflation has been the same, which means that these prices are amplifying. They're compounding on themselves. If inflation is 5% this year and then 5% next year, that means that next year the prices are up a total of 10.25%. And if that continues on, say for 5 years, if the Fed can't get inflation under control, now you're paying 27% more. So it doesn't matter if CPI or PCE is coming in slightly lower. It's still well above where the Fed needs it at 2%. That is their goal. And they're still 2.5 times off of that goal. It's still 200% above what it needs to be at. So, cashing out on my Tesla puts from last month. It's a good idea. I opened some Tesla puts, but I took profits the very same day that I opened them, so I didn't get much out of it. I probably could have held them and got a lot more. I was just assuming that it would be below 108, and I think I paid like $300 for those. So now they're probably trading for like $600 each at least. Last I saw, Tesla was trading at 102. Well, I guess it rebounded to 107, so basically these are worthless now, but this morning they were trading at 102, so they would have had like $600 value. Could have doubled my money if I had held, but that's okay. Let's see, SPY is making its way back up to 383. Losing confidence in this put debit spread. It doesn't make sense that we're rallying on this, but I guess we're wrong for the trade, and it's time to head for the doors. Maybe if we go back down to like 382, 20-ish. I mean, I'll just take the $130 loss. It's not that big of a deal. 12, 13. I feel like I'm getting swindled by the market makers. Is probably what's going to happen here. It's going to drop immediately after, but I'll take my L and move on. Come on now. Replace my order, please. I'm probably going to have to close them at 11. That's dumb. God dang it, the bid just dropped again to 10. Ugh. You would think that their Robinhood would better have functionality to where I didn't have to do that 5 freaking times. There we go. So we got it at 12. Boy, that sucks. But didn't take a lot of risk on that trade. Wasn't super confident in it. So, good thing we didn't go heavy, huh? And we've already had like 10 PMI reports coming in bad, so maybe that's the reason why we didn't react the same way that I had expected. But that is okay to take losses. Part of the game. God dang it, these screenshots, bro. Just not working today. Closing options, alerts, premium 101. Just cut losses on the SPY put debit spread. This one expires today, 1/6 at 12 each. Strike prices were 378, 379, I think. So definitely a long way from the 378 mark and going down $5 after we rallied on a. That report seems pretty low. But out of there, I'll log it here. SPY, whoopsies. Debit spread. This is a bearish assumption. It expired today, 1/6. Strike prices, I chose a 379 to go long on. 378 to short. I opened just 5 of them. I think it was at 38 each, but let me double check it. 39. Opened at 39 each. So 5 times 39, 195 minus 60. Lost 135 for that trade. 0.12. So 135. So at the end of the week, still up 10%, $700 in profit. My goal is just $400 for this week, so I'll take that any day. You think that SPY's going to end the day at 382? I don't know. It kind of seems like it wants to go higher, but maybe we just trade range bound and head down to that. I would say 381 would probably be more likely based on that heavy 381.39 mark that it loves to gravitate towards recently. Maybe we can look at the max pain point. That is a decent indicator for where the market makers who's controlling the markets on Fridays wants to be. So if we go over to max pain, maximumpain.com, type in, I think, options/options/SPY, go to today's expiration date. The max pain point for today is 382, so you might be right. Market makers are going to want to push it to 382. That way, all of the 382 calls and puts that are open are going to expire worthless. But if we go through the option chain and look at the open interest, let's see if it's actually accurate. So we're looking for a 382. I would imagine 380 would be more popular, but let's see. Yeah, open interest for the calls is 13,194. Open interest for the puts at 380 is 25. So there's a lot of puts at 380 expiring today. So they're probably going to try to rally the markets to get people out of those put options at 380. That's probably why you're seeing a decent rally right now, to get those people shaked out of those 380 puts. You got to think like the market makers and what they want. And then you have 383 calls, 22,000 that are open right now. So the markets are probably going to want to shake them out too. But you have even more calls open with a 385 strike price. So we might head up to that and then get rejected. If I had to guess, maybe we just stay below that 385 mark. But right now we're trading at 383. So the market makers don't want anybody to make money. They're going to try to keep it between $385 and $380 today. Wait, there's more puts open with the 375 strike price, actually. I guess with the cheaper price, you have to also look at the value of the options too. The total value of the options that are open. Like you have 32,000 open at 19, but then you have 25,000 open at 124. So there's a lot more money in the 380 puts than the 375 because they're more expensive. And then 385, these people paid, looks like 30 cents per contract, or it's going for 30 cents right now, but there's 28,000 open. So market makers are probably going to want to keep this between 383, where there's 22,000 in open interest, and these are like more than 2 times more expensive. So probably between 383 and 380. We could do an iron condor with that one. We might get a decent credit for it if we want to play with the market makers today and take advantage. You got to think like the market makers if you want to make profits with them. So 383 to 380 is where they would inflict the most amount of damage today. So if we do an iron condor, assuming between those strike prices, or we could do an iron butterfly even, 381, 382, I would say 381 would be better. And with the iron butterfly, you're going to take on less risk per trade just because you're pinpointing a single price that it needs to be at, and it's less likely that it's going to be at that single price point. So the less likely a trade is, the less risk that you have to take on. But obviously, the higher chance that you're going to lose on the trade. But I'm going to do a 381 iron butterfly. I'm going to assume that it'll be between 384 at the top. That's $3 above and 378 at the bottom. And that trade is paying me $244 credit for $50 of collateral. Jesus Christ. I think I'd be willing to put up like 3 of them, get about $750 in credit. Not a bad trade. Maybe just 2 of them. I mean, I don't really need 700. I'd be happy with 500. But SPY needs to come back down to 381. By the end of the day, it needs to be close to 381 and as close to the 4 p.m. bell as possible for this trade to make the best amount of profit. So let me open that. So 2 iron butterflies, assuming that SPY is going to be 381 to end the day. Based on what the market data is showing me, seems like a very decent trade if you want to trade with the market makers instead of against them. All right, new options alert. All right, just opened a new SPY iron butterfly. This one expires today, 1/6. at, how much did I get? 2 for 484. 484 divided by 2. $242 each. And my assumption is that it's going to be 381. And between 378 and 384 today. Options data is showing a bunch of calls at 383, a bunch of money spent on calls at 383. And a lot of money spent on puts at 380, so market makers are probably going to want to keep SPY between these strike prices. That way they get to make a profit, basically, and take away the profits that everybody else is spending to buy the 383 calls and the 380 puts. Let me just double check that call strike price. Jesus Christ. Yeah, calls, it was the 383 that I was looking at. And the volume on it, or the open interest on it, is 22.9 at 76. The next best is 385 strike price, but these are less than half the price. So a lot more money on the line for 383 than there is for the 385 strike price. So I don't think that they're going to let it creep above that 385 mark. If they do, probably not going to be much above it. Right now we're trading at 380, 374. This could be a triple top now, the third time pre-market at 9:30 in the morning, and then this is the third time that we've hit that 380, 375 mark and potentially are coming down from it. Yeah, no problem, MB. Thanks for tuning in. Have I considered more advanced options trading strategies using second-order Greeks to deploy gamma neutral? I want to work on becoming more delta neutral, but my trading strategy is a little bit different. I'm not so much focused on the Greeks because the Greeks only give you a snapshot of what's going on at the current moment. Of course, the Greeks are always changing, so whenever the stock goes up by $1, then it changes by the gamma value, and the gamma value is going to change as the stock or as the option becomes further in the money or out of the money, or if it becomes at the money, then it's going to be the highest gamma value. So since they're always changing, you can't really use it as a reliable source. I try to use a lot of, I guess, introspection and having, a background of trading for 3 years. I've kind of figured out how options get priced over the years. I'm not 100% dead set on it. I'm not perfect. Never probably will be. But I've learned a few tricks, and I mostly trade around events. So basically, I predict events before they happen. I have about a 60-70% win rate on average. So as long as I take on the right risk-reward ratio, it's more important that I do that than focusing on the Greeks for me. Now, a lot of people are very stats-driven, actual stats-driven. I'm more of a mental stats kind of person, to where I set probabilities in my head. What is the trade of this working out? So I have my own mental delta. I guess not delta, but a estimated percent chance of the option expiring in the money, which is also another way that delta is used. But I have like a mental delta that I set up rather than going by what the markets are telling me. Have I read any books that help me understand options trading? Not so much. I have heard of a couple books that could help. Options Playbook, I think, is one of them. I think somebody dropped it in the premium Discord. I'll try to find the link for it and drop it here in the chat. Playbook. How do you make it change colors? Magic. No. I have a special function that I'll show you, Roddick. I was trying to look for the audiobook version of this, but I couldn't figure it out. Where is the link for it? I know Roddick dropped the link for it. All right, here we go. So I just downloaded it to my computer. I wonder if I can drop it. Nope. Upload PDF. It's too big of a file. Are you kidding me? It's so dumb. Let's see if this one will hopefully do it. Not logged in. I don't want to log in. Screw off. All right. Let me copy the link for this and you'll be able to view it. Thanks, Sam. Thanks for joining us. So you should be able to use that link and that'll follow to the options playbook. Hopefully that's useful for you. I haven't read it myself, so I can't really give my review of it. I haven't been a big fan of reading pretty much throughout my life. I have been reading some books outside of options trading, a lot of personal growth kind of books, 4-Hour Work Week. Recently, I've been listening, it's all audiobooks recently, but 4-Hour Work Week, Deep Work, a lot of like personal development kind of books. That's been what I've been into over the last few months, and it's going to help me grow as an individual, and that's translated a bit into my trading. I'm also currently reading a physical book, if I can find it. The Expectant and First Year Father. Since I am having a baby in about, she should be due in 5 weeks. Super excited for that. So hopefully I can be the best father I can be. But feely about not reading. However, I'm aware that reading makes growth, so I'm trying to build good habits. Yeah, I would definitely say that reading helps in development and personal growth. I'm not sure that you absolutely need a book specific to options trading. I think that there's plenty of resources out there to learn completely for free about options trading, and I think the best thing, you can read all the books and watch all the different YouTube videos that you want on options trading, but the best thing that you can do is actually put in the trades and get real experience from trading. That is the best thing that you can have, is real experience. That will really develop yourself as a trader. So putting in the trades over a long period of time, learning from each mistake that you make, and kind of just refining the craft over a long period of time. You can't be in this expecting to make $1 million in a few weeks. I've been trading options for like 3 years at this point, and it seems like I'm just starting to like get good. So I think that it probably takes a timeline of like 2 to 5 years in order to become very good at something and you have to dedicate a lot of time and effort into that. Like, I make YouTube videos twice a week at this point covering options trading, so that's kind of helped to refine my craft and, I guess, solidify what I've learned throughout the markets. But the more time that you can dedicate to something day to day, and then in the long term, years upon years, the better that you're going to get at it. I'm a negative millionaire. Do I trade options all day on YouTube? No. I only trade for about an hour during these live sessions. I'm about to head off since it's 10:30. And then for the rest of the day, I'm going to eat lunch at 11. At 12 o'clock, I'm going to go on a nice little walk and meditate for a bit. And then probably resume trading at like 3. So I only trade like 9 a.m. to 11 a.m. And then at 3 p.m., I only trade for about 3 hours a day. That's all that I really need at this point. It's very focused, and what I'm doing too. Like, it's very focused work instead of being super distracted by, text messages, social media. I guess I am on social media with this YouTube live stream, but, still, it's all about options trading and learning about it each day. So as long as you can dedicate only a couple hours to it, the more time that you can dedicate it to it, the better. But I have so many different other things going on in my life that I can't focus all of my time. Like right now, I'm developing an app for options trading and calculating profits. It'll basically be a revamp of my little spreadsheet that I have. It'll be an app that will be hopefully automated. The first stages I don't think are going to be automated just because it does cost a little bit of money in order to connect to the APIs. But after that, we're going to add artificial intelligence that'll create almost like a AI trading coach integrated into the app. So that'll be a nice little addition that nobody else has had. This man is the woke truth. Peace out. Make that money. Yes, sir. I'll seem to be very stoic. I don't really like labels. I don't label myself really as anything. I feel like labeling yourself kind of puts you in a box and doesn't let you explore outside of that. Like, a lot of people politically, they identify with either Democrats or Republicans. I don't identify with either. I think that both sides of the political spectrum are equally shitty in their own respects, and I take no political stance at all. Like, I don't box myself into any sort of category, basically. That's what a stoic would say. Would you consider doing cover calls on low-price stocks as a long-term strategy? I don't think that cover calls and cash secure puts are a good place to put your money right now. I'm making a video about that this weekend, and that should be coming out, I think, on Saturday. Let me head on over to my YouTube studio. So this one, no, it's this one. Options trading income scam. So basically, selling options and cover calls, cash secure puts have been a great strategy over the last few years as there's been unlimited money throughout the economy thanks to the incredible stimulus after COVID. And then you had that piled on top of the 10 years of keeping interest rates at zero. So there's so much unlimited money over the last 10 years and especially over the last 2 years. So stocks just continue to go up relentlessly. And now you're having the opposite effect with the Fed tightening the fiscal policy. So the same strategies that worked for you during 2020, 2021 aren't going to work for you in 2022. 2023, and whenever the Fed decides to start cutting rates. Now, once we get to a period back to quantitative easing, then these strategies will come back in handy. But for right now, I would not be selling cash secure puts. I would not be selling cover calls. the stocks that you're likely to invest in, a lot of tech stocks are going to be falling. So you can switch up the stocks, and this is something that I mentioned in the video too. Industrial staples are likely to outperform, like McDonald's. What else? Grocery stores. Not sure at the moment, but basically staples, industrials, the Dow is likely to outperform SPY and especially QQQ. So if you do want to use the wheel strategy, I would choose very specific stocks like Coca-Cola, McDonald's, things that people still need during a recession, rather than putting your money into dispensable things like Meta, Facebook. Tesla, I would say, is a little bit dispensable just because of their high price point. And a lot of tech companies are just going to have lowered growth over the next few years as the fiscal policy continues to tighten. Walmart, yeah, that's a good one. XLP, I'm not sure about that. I'm not sure about energy. Energy, I actually don't think that energy is going to do well. Energy usually collapses during a recession because there's less economic activity going on. So that means that there's less business travel, there's less overall travel in general. Like if people are unemployed, then they're not going to be driving their car to work. So if you look at oil back in 2008, the last recession, major recession that we had, unless you include 2020, which was a very short-lived recession, and then 2018, also short-lived, only like 6 months. The last time that we had a major recession, which I believe is probably going to happen because of how quickly the Fed is raising rates. It's inevitable, I believe. But if we go back to the max quarterly chart, energy dropped like a freaking rock. This is the price of crude oil. And in 2008, it went from a top of $147 all the way down to a price of $34 a barrel. It's already dropped a crap ton from 131 down to 75, but I think that there's a lot more room to go as the economy continues to slow down. Again, when the economy slows down, there's less people that are working. There's less people that are flying business class or flying for business, which means that the demand for oil is going to come down, and prices are just a function of supply and demand. So whenever the demand for this goes down and the supply stays the same, the price of oil is going to drop. Home Depot, I'd say, is... I actually think Home Depot is a little bit dispensable, but maybe I'm wrong on that. OI per strike price, so for ED, you have a lot of open interest. You can see that for each strike price. Yeah. Said it once, say it again, missed out on puts last year. We'll miss that chance again. There's more pain coming in the market, and puts are printing me money. Yes, sir. I believe it. Yeah, 2023 is going to be a very rough year. I think with the interest rates being as high as they are, we have a lot of layoffs going on right now, especially in tech. So I still think there's a lot of room for tech to fall. So that's QQQ mostly. Still has a lot of room to pull back. Amazon announced some layoffs recently. They're actually positive 0.5% today. Salesforce, I forget what their ticker symbol is. Whoopsies. Salesforce. What is their ticker? CRM. That one's actually up 2% today, even after the layoffs. Maybe people are seeing them cutting back their spending as a good thing for the company. Possibly. SPY is shooting up at the moment. I think it's just, yeah, it actually broke through the 383.74 mark. Shocking enough. I still have that iron butterfly open. Still going to keep it open. I think that the market makers are just going to swing us in both directions. So, going to keep this iron butterfly, assuming that we're going to be at 3-1 to end the day. And I think that's the last trade that I'll make, and let me make sure to log the dang thing, otherwise I will probably forget. Today, SPY, both, iron, butterfly, and this is a neutral strategy, expiring today, Strike prices I chose were 378 and 384. And then for the short strike price, I chose 381. I opened just 2 of these, and I got $2 and something odd cents, 242, I want to say, for these. Yeah, 242. 384 has been a strong pivot point for several days. Yeah, absolutely. It's that 380, 374 mark has been rejected a lot of times. This is an open or a closing price sometime within the last few weeks, it seems like. Yeah, based on... Actually, that's not an opening or closing price. I don't know where the hell I got that from. Interesting. Must have been a 2-day, so I might be able to get rid of that price level. I don't know if it's... Oh, it was the close from 1-4, so the close from Wednesday. I just need to adjust the where it's at, where it starts. SPY keeps bouncing around 384. Yeah, if you look at the last 3 weeks, it's just been trading range bound for the most part, between 374, 375, and a top at like 385. So getting rejected at 385 might be a pretty likely event for today, but it looks like we're powering right through it. Interesting enough. Maybe they're trying to squeeze the people out of the 380 puts by convincing them that it's going to go higher. I don't know. Market makers are very tricky on Friday, so be careful with whatever you trade. Don't take on a lot of risk. And I will catch y'all on Monday at the same time at 9:30 in the open. See you, everybody.